Hello everyone, today is September 1st and this is our first session of the Wyckoff Trading course, part 2, the Practicum. To sign up for the Practicum, you have to make sure that you've taken Wyckoff Trading course part 1. This is a prerequisite for this course, and I received quite a few inquiries about, getting to this level right away. And I've explained to a lot of students before that no matter who you studied with or what books you've read, it doesn't really mean that you're going to be up to date on all of the knowledge that we give you in part number 1. So it is a requirement, it is a prerequisite. And if you don't have it, please check out Wyckoff Trading course part number 1, and we'll be happy to accommodate you in the next semester. Meanwhile, enjoy this session if you're just an observer. But for those of you who are ready to sign up, for those students who have taken Wyckoff Trading course part 1, and obviously for students who already signed up, we're going to have a regular practicum session today. We're going to talk about, certain things, how we're going to conduct our course. Also, we're going to do some exercises. I'm going to show you guys what exactly we're going to do today and in the upcoming session. So I'm really excited to start this new cycle with you. All right, so some class details. As usual, you will have the homework, and it's going to be a little bit more intense than in part 1. And obviously, again, the homework is optional, but I would be expecting that at this level, you would be paying a lot of time and attention, to those homeworks that we do. If you submit the homework, don't forget, to put WTC part 2. Actually, this is incorrect. This is just from part 1. So somewhere here, just mention that this is part 2 so that it would go into the correct folder. And as usual, all of our sessions are interactive. Even today, I will ask for the volunteer from the students who already signed up for this course. So please make sure that you have a microphone built into your headset and you have that capacity to interact with me. All this video will be uploaded to the YouTube. So for those of you who are just observers and guests, you will be able to watch it again on our YouTube channel, Wyckoff Trading Method. And for those of you who are going to sign up, or you guys are students already, all of the recordings and slides with the homework, well, that will be posted on the class page. All right. Let's move forward. As usual, everything that we discuss in these classes is for educational purposes. Please stop the recording and read the disclaimer in full. Specifically, what are we going to do today? So we went through our quick introduction. Let's review the market. So this is usual practice for us. We do this on Monday, Tuesday, Wednesday in all of the 3 classes. Then we'll go through the curriculum. You'll have your first homework assignment. We will review today bias game number 59, and then also I'll give you the assignment for the next bias game. This is something that we will be discussing each week. If you have any questions, make sure that you email me the chart with the question. That's the usual practice that we do. And then we'll go into our first exercise, which is going to be an action sequence exercise on price volume. In session number 2, we're just continuing our work, and this is going to be consistent. So the bias games are going to be consistent, so each week we're going to go through those. We're also going to be having our anatomy of the trade segment, where the whole class is going to trade some instrument. We will have to decide by next session what instrument exactly we're trading, so I will be soliciting your ideas on what stock or what futures, or whatever we're going to trade as a group, and that will become a homework. So everybody's going to analyze that instrument and send me your analysis, and we'll go through that analysis during the segment in the class. and we're just going to continue if we have anything left today from the exercise number 1. For those of you who are thinking about registration, so go to our website, Wyckoff Trading Course Part 2, find that, or if you have any questions, wyckoffAssociates@gmail.com. Today is the day when the discounted pricing is going away, so make sure that you register today or tomorrow morning. That is for the whole 15 sessions. And if you're an alumni, and we've got quite a few alumni, it's just so pleasant for me to see that in the last 3 cycles we have more and more alumni repeating this course over and over again, just because, well, exercises change, but the skill kind of have to be constantly be developed. We can't just stop exercising and go away. This is going to be the big thing for us, that is to exercise. For those of you who would like to use our payment plan, it's still set at $250 per 4 sessions, so use that to your advantage. There is literally no interest that we charge for this payments, so therefore I know this is very attractive options. I've mentioned other classes. So yesterday we've conducted Wyckoff Trading Course Part 1 that is all about the analysis, the knowledge, the foundational skills that we need in our analysis and selection process. That session was recorded and placed on our Wyckoff Trading Method YouTube channel, so check it out. And today we're conducting Part 2, the execution, the practicum. It's a free webinar today. And then tomorrow, I want to bring your attention to this class. This is the application class. This is where Bruce Frazier and myself and I conduct current market analysis, which includes not only analysis of the market, but in-depth market analysis, but also we look at the top-down approach where we look at the sectors, industry groups, stocks, any type of case studies that we discuss. Also, there are numerous segments that have students involved in those, like scanning, like anatomy of the trade, like students' chart submission, and so on and so forth. So an hour and a half of very kind of like intense talk about the markets and the analysis, so check that out. And also, if you have any other Wyckoff related demands on about how the methodology should be applied, go to our on-demand section and check out what kind of offerings we have there. We have, I think, over 20 courses there, or 20 series that you could sign up for. Also, just to stay updated from us, sign up for our weekly newsletter. You could find the sign up page on our website, and usually we do have that end of the week update on the markets, any type of announcements as to what kind of classes are coming up. Updated communal Wyckoff watchlist. This is something that is being done by students and then curated by Bruce and I, and we're so proud that it's been working for quite some time, and we have such a great feedback from our students. This selection watch list is something that is done on the weekly basis, and it helps students not to spend a lot of time going through a lot of stocks, but just going directly to the pool of stocks that are of most interest to our students and us. So check this out. You can find it on our website, also on stock charts. And then we have our regular vlogs, usually the power charting and anatomy of the trade episode, especially for those of you who are going to be students in this class. I really would like you to pay attention to the anatomy of the trade, as Franz and I discuss a lot of the trades that did not go well. And we will do so in this class as well. And while we're on this subject, yes, I do want to see some of your trades. So send your charts, send your trades on the charts, identify the points of the entry, stop losses, the logic behind those, your exits, and we could definitely look into those. Those could be a part of the Q&A section for each class that we're going to have. So usually students do send questions. The only request that I have about the questions is submit those with the chart. And then also check out our blogs. We have blogs on crypto and Wyckoff, on Power Chatting blog by Bruce, on Wyckoff scanning, and also the blogs on the anatomy of the trade. If you feel like you are interested in part 2, but you don't have the prerequisite course taken before, which is part 1, I would suggest you jump on part 1 right away. And this is the curriculum for WTC part 1. There are 15 sessions. Actually, this is a little bit incorrect, so 11 here. And what do we study in part 1? Market structural analysis. This is the framework for Wyckoff work. This is where we want to study and understand how the price structure changes, where the change of character comes in play, change of behavior exhibits itself, and then we could say that the price goes into a different structural environment. Once in the trading range, we will concentrate our attention on Wyckoff events and Wyckoff phases. Those are going to be identification tools for us as far as buys and the timing. And those are extremely important. In the second part of the course, we will be starting supply and demand. And again, this is WTC part 1, the analysis, so it's not this class. It's for those of you who after maybe this presentation will decide to take WTC 1. So this is probably one of my favorite subjects, anything on tape reading, the market, I really love, and we're going to do a lot of tape reading exercises in this course, in this series. So what do we study there? Volume and price relationship, that's extremely important. Effort versus result, how volume and price interact with each other and what it means. We're going to go bar by bar, analyzing a lot of charts, swing by swing. We're going to look into a lot of volume patterns for Wyckoff phases, and we're going to also look at a lot of historical analogs on the chart as to how we would be making any type of deductions as to what the price will do next. In the next segment, relative and comparative analysis, this is somewhat familiar to a lot of you just because you've studied this somewhere else. So we're going to have our own spin on this, where we're going to identify some proprietary things as to how the relative performance should unfold. How do we look at the causality of the relative performance and how that effect is going to take place. Also, we'll talk very briefly about filtering and scanning. One session devoted to trade management, and this is something that we will be discussing in Practicum in a lot of details. So we're going to spend a lot of time on this subject here in this course. Obviously, entries, exits, stop losses, their movements. How do we properly scale in and scale out to the position? And then session number 15 usually is a Q&A session. So if somebody in this group would like to register for this course, again, go find WTC part 1 or just email us at wyckofassociates@gmail.com. All right, let's talk about the market. Here it is. This is my usual screen of the main instruments that I like to look at. So on the top, we have S&P, NASDAQ, Russell, and the Dow. All of them are in uptrends, in long-term secular uptrend and intermediate uptrends, and then except for the Russell, which is in a short-term trading range, every other index is in the uptrend as well. We could see some trend lines here. Those are up channels, and you could see that we're somewhere in the middle for the S&P, so there is still some room for the price to accelerate even more. And today we are overcoming 3,500, closing above that. So I wonder if that climactic run acceleration is going to happen, in the next couple of days during this week. Nasdaq is accelerating at this point, so it also shows a lot of climactic characteristics. We would probably want to see a little bit of the increase in the volume signature as well to confirm that final push up. And obviously, the biggest question is, well, if the climax is going to happen, what's going to happen next? And the easiest answer to this is just basically whenever we encounter some kind of overbought condition, and then that condition is being followed by any type of reversal pattern, then we would be looking for some kind of change of behavior reaction. And that's what would identify the change of structure as well. From the uptrend, we might have that change of behavior reaction. That is going to be the largest reaction on the way up. And then that would, at least at the minimum, suggest some kind of consolidating action or possibly a reaction. And obviously, when we state this, the question from yesterday's class was, well, when would we decide that indeed we are going into the reaction? Be patient and observe the price action. That is usually going to come with any type of reversal once we're in truly overbought condition. Relatively and comparatively, obviously, Nasdaq is still leading the way, although we had some pockets of outperformance, here and there. But still, if your portfolio is comprised of different stocks in different sectors, then you're probably noticing that technology stocks are definitely doing much better. Then off to the next four instruments. Let's look at gold first. So we had a pretty good run. This is where big interests are accumulating. Gold, I saw some articles on Warren Buffett actually accumulating on the way up, so that was very interesting. We're currently in the consolidation of some sort. We are in the potential phase B at this point of time, but we also could have a very short duration consolidation, and I'm looking at silver here even more, and silver is kind of trying to get out of this apex formation. So this is a very interesting and good sign when supply comes in and the price still has the capacity to go up, meaning that absorption happens here. And then look at the today's bar, which is much higher, somewhat higher than the previous supply bar, and yet supply is diminishing. So this is a good sign on the potential breakout of this apex and potential continuation. So I wonder what is going to happen with gold. Would the gold follow kind of the same pattern? Very interesting pattern in Bitcoin, where for the second time or for the third time in the structure, we form some kind of apex formation. We have some kind of phase C type of attempt to go down, and we are producing local spring. And then after that, there are quite a few confirmations of that spring, and a nice resolution to that spring, suggesting that potentially we're going to still go up at this point. And look at the volume signature. There is really nothing damaging here in this case. Supply is gradually going down, and all of the attempts to go down are not that aggressive, not distributional at all. Oil, this is probably the most intriguing structure right now. just because we've had a big run up into the 40s. And from here, we are consolidating, but we are consolidating on the uprising scale. And usually this type of patterns resolve with a lot of momentum in either direction. I think the key is going to be right here in this area, whether the price is going to overcome this or it's just going to kind of like slowly drift and then drop to the downside. So we will need to see how it's going to play out. We could also go through the analysis here, and I think that at some point, in some class, we will need to do that. So I'm just going to leave it for further classes. All right. Some questions from Amit. Nasdaq is in overthrow, so expect him to add soon. Soon. Yeah, and we kind of see that, especially these two bars right here, they have a lot of push to the upside, and they have a lot of climactic characteristics. But climactic runs are very interesting, structural creatures because they could run for some time, and we could definitely, expect overthrow, overbought conditions, and we are overthrowing here in this area. So we're saying that that's why we're considering this to be a climactic run. We just need to see and wait some kind of deterioration of the demand, stop in action first, and then the reversal, and then we would definitely jump on that and just say that yeah, the reversal has happened, and potentially we are going to go into some kind of reactionary mode. But until then, all of our statements are going to be just guesses. So we might as well just wait and make sure that the price does exactly what we expect it to do in the climactic run. Another question from Amit: could you elaborate on the differences between change of behavior and change of character? So change of behavior is going to be something that looks characteristically different than anything that we've seen before. So for instance, on this reaction, we're seeing that this reaction is a change of behavior. Why? Well, because the supply has increased, that's number one, and it increased much more than on the previous reactions. You will have to go back and kind of see this a little bit in details. But also the price behaves in a different way. We have a big bar to the downside, something what we've seen a lot during the COVID-19 reaction, but we haven't seen a lot since the March 23rd low. And therefore, this is a change of behavior. A change of character is a structural concept. A change of character usually suggests that after the change of behavior reaction, we have an attempt to retest the movement to in this case, to the upside, and it fails. So these two swings, down and up, identify to us that from the uptrending environment, the environment has changed into a trading range, non-trading environment. And those are the major differences between the change of behavior and the change of character. From Murat: could the Nasdaq break out of the trading channel and form a channel above the old one? Fed is pumping so much money and the elections are around the corner. Yeah, absolutely. And, actually, since, we have some other highs here, we could project that line and we kind of could see where that overbought condition could bring us. So I definitely would look into that. From Iqbal: the expected rotation from large to small caps has not materialized. Is that a warning sign? We definitely would like to see Russell to follow, right? So just for the rally to be broad in breadth. But I would say that with the Dow, with the S&P, with NASDAQ, we have quite a broad rally at this point of time. It was a big question since the March 23rd lows, and then that market breadth was increasing. What's positive here in the Russell reaction is that it doesn't really react a lot. Those are not, big reactions that we're seeing. This latest reaction comes to the support level here in the up channel, and we could expect here at this point that there's going to be at least an attempt to break out, and I actually would expect that that's what would happen. All right, good questions. Let's go further. This is something that I was shown yesterday in the W2C1 class, so I'll be very brief here. For the S&P 500, we're at the all-time high, and we're still in the uptrend. In the channel that we see here, we are touching multiple times the mean, and yesterday we were right here, and obviously we're somewhere here. So our extreme overbought condition is going to be above 3600, and it's going to be into 3700. So this area right here, like it happened before at the intermediate buying climax, this is something that we would be expecting to happen. And you could see how that climactic run concluded, right? So we have some bars that are showing overbought condition already, but it doesn't mean that the price, necessarily going to stop right away. It has stopped here, but there was not a lot of causality built, for this move, and we were not in such a prolonged up move where supply was absorbed on the way up. But here, this is probably going to be closer to what we might experience next. So some kind of acceleration, some kind of attempt to go up and stop in action. Then there is nothing happening here, and then a big day to the downside where a lot of money managers are capitulating really quickly, and they want to get out of that particular market really fast. So could this happen? Maybe, probably. If that happens the same way, that would make a lot of sense. And we would have to see how this particular reaction is going to unfold, where exactly it's going to stop. If we're going to have some kind of more of a sign of weakness type of move that would go below the area of the support and then attempt to go up, maybe form a trading range or maybe form some kind of secondary test and then continuation to the downside. All of that, those are just scenarios, and we definitely have to see how the tape is gonna read to us at that point of time. On the S&P 500 1-hour PNF chart, this is a traditional method with 30 points per box and with one box reversal. We could see how nicely all of those smaller reaccumulation areas are pointing to the next area where reaction will happen and we go into a trading range. Reaction will happen and we go into a trading range. So we're in that zone. We are actually in more overbought condition here for both of the targets that we see at 34, 50, 60. And that's why we would be expecting some kind of stop in action and then the reversal. But as we see on the vertical, there's a little bit more of the room for the price to go. What also is important, when we look at the larger causality that was built around March 23rd low, we see some larger counts. We see some segments that were not counted yet. They are in blue. So there are some price objectives that are somewhat higher, and that is suggestive that even if we're going to stop here, we're probably going to stop for some time. We're probably going to stop into the election decision. And then after that, if everything's favorable, we might actually resume the up move, and the higher targets will play out. And the same here for NASDAQ. This is just the PNF without the vertical chart. So you could see the beautiful structure here, beautiful course on the PNF chart, which you will not see that clearly on the vertical chart. So it's useful for us Wyckoffans to look at the structure in this way as well. And as you could see, again, all of those small accounts, they are materializing really well and identify an intermediate type of tops where there is some kind of change of behavior reaction that is suggestive of a trading range, and then those trading ranges become areas of the stepping stone reaccumulations, and that's all happening in the confines of the up channel. It looks so beautiful. So we are in this zone right here, 12,006, 12,001. And we also have some mega counts that if we count those, we have some higher objectives above 13,000. So with the climactic runs, that could happen really fast. So we just need to be on the lookout of how that climactic run concludes. I mentioned communal Wyckoff watchlist, so please check out this latest installment. We actually had quite a few stocks in the latest installment. Well, why? Well, because there are so many of them that our students are picking up, and they're saying that there are a lot of Wyckoff patterns there, and the composition is very interesting. I'm using here the relative rotation graph. And we're seeing how from the leading sector, a lot of the stocks are actually going into some weakening state. So that also could suggest that we're somewhat close to the intermediate top. Check out the communal Wyckoff watchlist if you want to participate in the creation of that. Go to the page on our website and receive the instructions, and you could do this on the weekly basis and just enjoy this weekly selection that our students do. Obviously this is all for educational purposes, but it's in real time, it's for real stocks, so you could definitely use it to your benefit. Let's talk about the curriculum for this class. So for those of you who have gone through Wyckoff Trading Course Part 1, I told you guys that the whole course, all of the 15 sessions, were devoted to the knowledge, acquisition of knowledge. That's what we've been doing in the previous course. Well, as I usually say, knowledge does not automatically mean that you're going to make money in the market. You need to develop the skill, the visual recognition skill of the Wyckoff patterns and concepts on the chart. And even that, skill does not necessarily mean that you're going to trade and you're going to be consistently profitable. You need to work on your execution skills as well. And there is definitely that next level with the Wyckoff Trading Process Group, where more advanced students are going through and creating the weekly, daily processes that they use to be more consistent in their trading. So that's the next step. What are we going to study in this course, the practicum? Well, definitely, as I mentioned, we want to advance our visual recognition skills. So we're going to take the knowledge that we have and we're going to apply it in all of the drills and the exercises. And all of those exercises and drills are going to be concentrated on a better understanding of bias and timing, but we're going to go even deeper than that. As some of the alumni of this class already experienced, that relationship between the price and the volume, the effort and the result is so extremely important. And we're going to spend so much time on that. So you're going to develop a really great sense of how to combine the price structural analysis with stay trading techniques and how to execute your trade. So we'll have a lot of action sequence type of exercises of different kinds where you will be tasks, and we'll do one today. You will be tasked either with the selection, or if not, then we're going to go right into the execution, and you would have to execute not just the entry but the whole trade. How would you scale in it? Scale into the trade? How would you scale out? Where would you exit? How would you move to stop losses? All of that is going to be studied by us in a lot of details. Another point that I want to make, especially for those of you who are new to Wyckoff Analytics and you're just an observer, a guest. I hear a lot from different people that well, doing the drills and exercises without actually, committing the money is not useful because there is an emotional component that is missing. So to me, this is really kind of telling about where that particular person is in terms of their own development. So I would urge you, if you have those type of thoughts, to rethink this seriously, because in any craft, in any profession, and think about the profession that you have to practice before you become proficient. And a really good analogy that I love using is just because I love watching basketball, NBA basketball. Um, all of the stars, all of the players, they do practice a lot of their physical skill before they go into the game and actually perform. Probably the only person that I've heard and stories about was Allen Iverson, who just didn't like practices, but he was just immensely uh, gifted as a basketball player right away. We are not that, so we will be having a lot of drills and exercises, and this is definitely the class for people who prefer to work on their skills, who prefer to put some sweat into the work that we do. And I guarantee you that if you practice, you will improve. We also will talk a lot about trading tactics and trade management. This is very crucial area. Again, knowledge is not enough. Even a good knowledge is not enough for you to be successful. Uh, Even if you develop the visual recognition skills and you see the Wyckoff patterns on the chart, you still have to be able to manage your execution in a very optimal, efficient way. So this is where we will be discussing different scenarios, how the trade or the price structure might unfold, trade management itself, as I mentioned, points of entry, exits, and so on and so forth. We'll talk briefly about the risk management, and this becomes a little bit more important to us as we are becoming more of the intermediate advanced traders. And then we'll talk about filtering some of the trade candidates. We also will deepen our knowledge of the Wyckoff analysis in general. So we'll talk about different behaviors in different phases. We'll talk about different variations of the volume signatures. We'll talk about the trends, which is a little bit forgotten skill. And our concentration is usually on the points of entry and exit, but how do you behave and how do you manage your trade when you're in the established trend? So we'll have to look at that. Some of the historical examples will be discussed, and some optimization and references to the modern TE tools uh, that you could apply in your Wyckoff analysis will do that as well. All right. All right, let's go to our homework chart. And there are 3 homeworks for next class. And again, obviously, we have more homeworks for the next class just because we're studying this course. And this is the next level, so I'd be expecting that we would have a little bit more work done when with your level of knowledge. So assignment number 1 is going to be very simple. I want you to read these 2 articles. One is a chapter from the book Outliers by Malcolm Gladwell, and I'm sure that a lot of you have read this book or heard about this. And the chapter that I'm gonna upload into our class page is going to be 10,000 hours. This is a quantitative way of practicing. And then the second article, the mundanity of excellence, this is on the qualitative way of practicing. So please read those 2 articles again. They will be uploaded to the class page. And we're going to briefly discuss it. And we're going to build our intention around this course just based on those two articles. The second assignment, and this is going to be a consistent assignment from week to week, is going to be a bias game, the bias game that is on right now. So the current bias game that our students are going through is bias game number 60. So you could find that on Twitter or on our website. I also will be giving you as a part of the homework, so you could follow it like this. All of the students, preferably would be submitting their bias game answers to me before the next class. And we'll talk about this more today. And assignment number 3 is going to be to think about one stock or one instrument that you want the whole class to trade. So please make sure that in the next class when we're going to have this discussion, you guys know exactly what you would like to trade, and we'll go by by elimination, and we'll figure out the instrument that would be of interest to the majority of the people. What this is going to be is the anatomy of the trade segment, where in real time from class to class we will be voting as to what to do with the position, how do we manage it, and we'll discuss it. So that's always very exciting. All right, I mentioned the bias game, so you could find it on our Twitter. Our handle is at Wyckoff Analysis. Go check it out. We usually post the assignment chart, which you could print out, go through your analysis, and then you could vote with your fellow students on our Twitter as to what bias do you think this trading range is, accumulation or a distribution. And sometimes we would have other bias games, on the selection and other topics. And then in a couple of days, we would publish the solution, and that solution would include our own labeling, our own bullet points on the chart, and also a Wyckoff story with the bias identified that tells you step by step what kind of analysis we would be conducting as we go through this trading range. All right, and with that, this is our first discussion of the bias game. So for those of you who are current students, and I'm sure that you guys probably have looked at this bias game, so let me just kind of interact with you a little bit. So say yes if you've seen this bias game number 59, if you've had a chance to go through that and to go through the solution. Just say yes. And then just think about what was the biggest problem with this bias game. So I see Amit has done that. Anyone else? Okay, well, okay, some of you forgot the solution, so that's okay as well. All right, well, maybe this is a great opportunity for us to discuss exactly what is happening here. So why don't we have the discussion about this chart right now? First of all, let me ask you right away, what do you guys think the bias for this trading range is? Is it an accumulation or rather reaccumulation? But we usually would say accumulation, just not to confuse other people that are not that familiar with Wyckoff. Or is it a distribution? Just type in your answers in the question box. All right. At this point, we're okay, a little bit more on one side of the bias. Okay, receiving a lot of answers, so thank you guys for being so interactive with this particular segment. Okay, so let's go through this. Majority of you, or a slight majority of you, is saying that this is a distribution. So I'm going to go to people who said that this is an accumulation, and I want to ask you the question, what is it exactly that, would tell you that this is an accumulation? Just give me any type of random answers. Why do you think that this is an accumulation? And while you're thinking, let me start the analysis right here. So we're clearly in the uptrend. We've seen how some supply is coming in. So this area right here becomes extremely important for us. We want to note this area. This is where supply has been absorbed before. And then we're going into a short-term testing period, short-term consolidation, and into the final climactic run, which concludes with, look at this volume signature, right? So on demand, it's very low, and then boom, this is the last bar, or at least approximation of where we are going to have a stop in action. So in a way, reminds me a little bit of what we're seeing right now in the market. So very clearly defined stop in action as the buying climax. And then with the next reaction, which we see on the gap down on the increased supply signature, and this is where we're saying that we're observing a change of behavior. We are saying that something different is going on. We haven't seen this type of reactions before. We haven't seen this type of supply coming in and producing that type of gap down. So with that change of behavior, we're assuming that we're changing the environment from uptrending environment to a non-trending environment, a trading range. And from here, we could start our Wyckoff labeling. So with that trading range right here, the next step for us is to define the buys. How would we define the buys? Well, we would go swing by swing and try to identify how supply and demand are interacting with each other and with the price. And let's just see what kind of answers we have here. So for those of you who thought that this is an accumulation, you are saying that supply has been observed, accumulation going into the pattern until it disapproves itself, which it did. It looks like there is a lot of selling pressure, more like a distribution. Okay, guys. So some of you were still who said that this is a distribution are commenting. Okay. Lower volume, more sellers than buyers. Okay, again, I think that was the distributional comment. Major effort at the highs produced downward result for distributional bias. Okay. Again, distribution. Failure to break support on high volume signature from Steve. Okay, so we'll definitely look at that. In the last segment after high volume action, a drop in price. There is a drop in volume in the last leg. Looks like a sprint with low volume. Okay, so so we kind of got maybe like 3 answers, from people that were saying that this is an accumulation. Supply absorption, then reversals at support area, and also a potential spring. So let's just discuss those 3. Supply absorption. Well, when we look at the supply in general, we would be thinking about the volume signature and specifically how the volume signature increases during the trading range, and that usually would identify the increase in both supply and demand. So therefore, whenever we are talking about, let's say, supply, and we'll go through the supply signature right now, we usually would like to see increase in the volume signature, which would identify in both increase in supply and demand. And then we also would like to see the price follow that increase in the supply signature, and we want to see the prices start making some kind of new lows or break some kind of levels, have some kind of ease of movement, and that would define more of the distributional type of qualities. If the price cannot produce those type of sign of weaknesses, then most likely its supply absorption is underway. As for the reversals at the support areas, and we're talking about this type of the recoveries, this type of the recovery, this type of the recovery, those are definitely helpful to us. And I think that what needs to happen with those is we need to see what kind of continuation we have after those type of the reversals. Are those continuations dynamic rallies that are taking us not only to the new highs, but also they keep the price above the level of the resistance there. So we'll go through that. And then spring action. And obviously with the spring action, we're looking for the undercutting of the support and then quick recovery back into the trading range. And from there, after a series of tests, we want to see some kind of sign of strength rally that identifies to us the strength of the demand to push the price higher through the trading range. Okay, well, let's go through the supply signature here and just kind of see what happens with the supply, and then we'll go through the demand. So supply is definitely increasing here on the first initial automatic reaction after the buy-in climax, and we would call that a change of behavior. Multiple attempts to retest, very interesting attempts to retest. They go into the body of the gap, but they don't really test the buy-in climax resistance. So that shows somewhat of the weakness as we are trying to rally. Only after the third attempt, where supply is decreasing, we have some kind of rally. And what kind of rally do we have here? We are overcoming intermediate highs, and we are up thrusting where that gap has started. And after the up thrust, we are aggressively going down. And with that aggressive rally, what happens? The effort or the supply signature, effort to the downside increases relative to what we've seen before on the attempts to go down before. And what happens with the result? Well, this is the biggest reaction so far in the trading range. Not only that, it actually commits below the previous testing points. So this acts in itself as a sign of weakness. And there is usually that type of the discussion that, you know, I try not to involve myself into in Wyckoff community just because, you know, of how the Wyckoff schematics were constructed. So usually the idea here that minus sign of weakness shows to us that there are some kind of distributional qualities, and we would be expecting from the sign of weakness a rally that could actually show some new highs. So this is a higher high relative to the previous high. So and that's kind of like a point of contention among, you know, some of the Wyckoff teachers here. Look at how after this low and after this low as a test, we're actually making an up thrust. So the price could go in the rally in phase B into phase C into the new high, even, you know, if we have a major a minus sign of weakness. So this is just on the side note. But as we come back to this reaction actually confirms the weakness that we have on the rallies prior to that, and it also confirms the selling that we had during the gap. So at this point, we would say that our bias is probably to the downside to be confirmed or to fail. And this is a very important statement here. As we go through the rest of the trading range, we want to make sure that we have the confirmation of the unfolding Wyckoff story. And in our case here, we have the confirmation of the, let's say, a downward bias. If we don't find that confirmation, and if that confirmation, you know, that bias fails, then we will reverse our bias to the upside, to bullish. And this is something that, you know, we have to accept as analysts and traders. We are not going to know everything right away because the picture always unfolds for us. So we will have to go through the whole trading range and maybe even change our opinion as to the bias or the timing as to what kind of trading range this is. Well, as we recover really quickly. So there is definitely some demand that is coming in this area, and we could see especially this part of the rally has that demand signature where demand is increasing, volume is increasing. Where does it take us? With all of this aggression, you always have to question, what kind of um, result do we have? Well, here is that previous level where we had 2 attempts to go up and then the up thrust. On this aggression, we come right into this area and we go into some kind of consolidation. So this is a very minor nuance. But what's interesting here is that if you are able to see this nuance, you would be actually questioning the validity or the quality of this rally on so much effort. And I would be saying that the effort to the upside here is most definitely increasing. And yet the result, if we would judge it only by the stop in action here, the result to the upside is actually having decreasing characteristics. Well, the rally did not stop necessarily here. It continued to the upside. So now we have to make a judgment. How did it do relative to the previous stop? Did it overcome it? And we kind of see that it only did this on the intraday basis. So again, if there is so much aggression to the upside, why can't we actually commit above where we see multiple closes up and maybe retouch of the previous buy-in climax resistance? So again, this is very suspicious. Even though it looks bullish, as I would say, it acts actually bearish. There is a lot of effort to push the price up, yet it doesn't really make a big bullish case for us. So looks bullish, acts bearish. And not only that, after this local upthrust action, what do we observe next? Again, a very aggressive reaction to the downside where the down spread increases, where we have the down gaps, and supply signature also increases as well. So out of these 2 price action points where we have the rally that fails in the upthrust manner, and then the reaction that has characteristics, again, of more of the bearish qualities, we still would be saying that the bias is to the downside at this point to be confirmed or to fail. Now, we would be expecting a rally from here. Why? Well, because if we would look at the lows, we see that this was a higher low. So that shows some kind of local strengthening and local testing. And our rally is going to be all about this smaller causality. And therefore, we would be expecting, an attempt to go to the previous highs. And this is the target zone where we would be expecting the price to go, somewhere here. This is actually a potential trade in the trading range. When we are short-term traders, we could use that. And by short-term traders here, I mean from 2 to 3 to 5 days to maybe a couple of weeks. If we are very comfortable Wyckoff traders and we recognize that there's going to be a swing from support to the resistance in a very quick manner, then yes, definitely we could do this. I think what's important about this rally is actually a couple of things. There is some supply that's coming in on this gap, and then the testing happens. The test is successful. That suggests continuation, and with that idea of the continuation, it probably suggests also overcoming of this resistance cluster area and the attack of the buy-in climax resistance. That's what we would be expecting. But as we go higher and we're trying to get out of the trading range, we don't have the volume supporting the breakout. And that's very important. So we don't see a lot of institutional demand pushing the price up. It's more that the supply has been absorbed right here, but by some of the institutions, and then the price just kind of goes there, and that momentum is actually going away, the momentum of the volume signature. Also, please note where that supply has come. It's in the area of the previous gap. It's in the area where previously, we've been stopped as well. So there is still some presence of the supply even in this rally. Well, the key for us, obviously, with this rally is just to understand what's going to happen next once the price commits to the upside. Is the price going to stop here and reverse? Then this would become an upthrust. Or is the price going to still go up and have multiple closes up and then kind of rest on the support level, which acted before as the resistance? So those could be two different events, and that's why it is important to have a very strong understanding of the basics of the Wyckoff methodology and tape reading in general if we want to apply price structural analysis and price volume analysis. So what does happen? On this bar right here, we have a gap down, which is bearish. We have a true range of this bar, which is increasing, and one of the biggest, largest true range bars that we see, kind of reminiscent of what we've had here. Not only that, if we would be analoging those two gaps down, we would be seeing that the supply signature has increased. Those are still bearish characteristics. We have not changed the bias yet. We were questioning the bias after we saw this higher low, and we said, let's see what kind of rally we're going to see here. And as this rally fails, and the way how it failed still shows to us that the bias at this point is still to the downside, to be confirmed or to fail, as usual. A very intense reaction on a lot of supply, which is still pretty much bearish. So now we have to think that some demand came at this point, and by the way, this is a very logical place where demand would come, because right here after this gap we had some demand, some testing action. So we would be questioning here that supply that is coming in. Would the demand that is coming in on these volume spikes produce some kind of rally? And if we would have the rally, what kind of rally we would have? That's the next question. Okay, well, the next rally for us is making a lower high. The rally after that, another lower high. And it's in that area of the buying climax and intermediate tops and phase B. Those are failures. They do not materialize in the breakouts to the new highs. So all of this, all of the two rallies have bearish characteristics where the price fails to make the new high. And also look at the demand signature. It's dropping into the second rally, which is obviously showing that demand is exhausted at that point. And as demand has been exhausted, what happens? Demand is exhausted. If the price would have stayed at this level, consolidate more, and we would say that on the background of the exhausted demand, there is no more selling, we could be thinking that there is a potential, for a reaccumulation. But at the same time, we are seeing that we're sliding down and then we're breaking to the downside around the area of the support, and again supply is coming in. This is not a bullish action. This is more of a bearish action. And by the way, just in general, if you would be thinking about accumulation and you would be thinking how supply should be absorbed, we would be thinking that volatility in this type of trading range should go down. In the distribution, we would see the increase of the supply, which would be combined with the increase in the result to the downside. And that would also mean that volatility would increase throughout the whole structure. And we kind of see it from the texture with which the price moves. So I would say that maybe this area right here, this segment of the uptrend, phase A and early phase B have the same type of texture, maybe with an exception of this gap. And that texture is that the spread is not that big. There is not a lot of volatility to the downside. Now, when we go into this area right here, look how quickly volatility has increased. And usually that increase in the volatility would be suggestive of the distributional pattern. And we kind of have this confirmation of the distributional pattern from one rally to another, from one reaction to another. Well, let's come back to the sprint situation here. So a bearish reaction on the increased supply signature with the local decrease of the supply, which suggests some kind of rally. And again, when we look at the rally, what do we need to see? We need to see what kind of character of the rally we're going to have. So what would a bullish rally look like? A bullish rally would look very convincing if we would overcome this gap area. Why? Because this is where supply has increased. It occurred there on a breakout. So if we would rally above this area, and specifically above this level here, that would suggest that whatever supply has come, it has been overcome. So what kind of rallies do we have? First rally is happening on the diminished demand characteristics, and it doesn't even overcome the high of that gap day. And then the second rally has a little bit better price spread characteristics, but yet it resolves itself in the local upthrust action, where we see a slight increase in the demand signature, but behind that there is obviously some increase in the supply as well. And we're basically failing after that upthrust into the lower high, and we probably would be expecting a continuation to the downside, at least to the level of the support. So at this point of time, if that happens, and if specifically we break this level, we're going to have the full definition of the downtrend, lower highs and lower lows. So therefore, even starting from the initial change of behavior and then specifically going into these two reactions and the rallies that follow those reactions, we kind of see how the bearish picture confirms itself over and over and over again. All right, guys. Well, this is our analysis, and I want to hear from you guys. And by the way, Twitter said 60%, this was a distribution. This is our Wyckoff story, so I would suggest that you guys would go through this. Baidu, daily chart. Here's the labeling, some of the bullet points that you could see, and look how after that there is a break to the downside. This could be a really good point of entry for us, one of the point of entries. And from here, we would be expecting, that gradual institutional capitulation where they're giving up their shares, and that, downtrend actually continued for some time. All right, so what was the hardest part with this bias game? What was the hardest thing to identify, to think about? Really quickly, I just want to see that in your answers. And obviously, I'm talking about, people, well, actually both, those of you who identified this as an accumulation and distribution. Min is saying, differentiating weakness from a shakeout. So, and are we talking about, Min, which weakness are we talking about? The minor weakness or the major weakness? Mike is saying two upswings after the upthrust. And I thought, Mike, that, these two rallies actually were quite telling, because there was quite a lot of volatility in this area on its own. Usually a bullish pattern would be a little bit more condensed. It would be a more, actually less volatile. And look at how these reactions come to the area of the support that was defined by the automatic reaction initially. You can argue that supply cannot push through the support. Yes, so that was a very interesting observation for me around August, October, major sign of weakness. because these lows right here, they are not being overcome right away. Well, how about this? What if I say that we have a higher high in phase C? Let me just try to connect and make it a little bit of the upslope in trading range. How about this mean, right? Do we commit to the downside here, right? So I always do this, trick when something like this happen. When on the major sign of weakness, uh, we are not committing that much, and then we have a higher high in phase C. So definitely try out this technique and see if you could see that the major sign of weakness actually does commit below the support. And then look at where the rallies, last point of supply rallies, come after that. And obviously we are relying a lot on the character of those rallies. Where do they actually go? Well, they go to the resistance point that acted before as the support, and we can't get through. So that was also very telling. Let's see, from a question from Murad, can we conclude that because volume has increased to the downside on the right hand side, in what we see now in phase C and D, that it is distribution and not accumulation? Yes, this is a really good observation, and I think that we've talked about the volatility already, how volatility generally increases. And by volatility, I don't mean the increase in the volume signature or supply signature by itself. Although, look at all of this supply increases here, right? So we're seeing that throughout the whole formation, there is more increases in supply than increases in demand. And then specifically, if we don't look at phase C and phase D, then this increase in the volatility and the minus sign of weaknesses should put you on the alert about a possibility that this is a distributional scenario rather than accumulation. Very good point and very good observation, Murat. Okay, what else? No matter how many times I watch you do the chart, I get it. Okay, Franz. Well, thank you. Yeah. Okay, let's go to Kurt. Here is a question. Is it possible to interpret that supply is weakening when you compare the high volume in June? Let's find this really quick. High volume in June, in May probably, right? Kurt, is it in May? Yes, in May. High volume in May compared to August, right here. Right, okay, also a good question. With the lower low price action. Well, when we have a lower low price action to the previous low where we've exhibited, the same type of supply spike. And even though we might say that here supply increased more than here, and you're right, I mean, like if we would look at these two analogs, we would be thinking that supply here is less than on the initial break of the upthrust. But at the same time, we really have to think that if supply decreases on this reaction, what kind of result to the downside do we have? Is result increasing, Kurt? Right, so look at the result on this reaction, and then look at the result on this reaction. I would say that the result has increased, yes? So this is what we have in terms of the slightly decreased effort to the downside that produces a much more significant result to the downside. What is the typical situation when that happens? Ease of movement. And we do commit below the area of the support here, so it shows to us that ease of movement happens on a slightly lower supply signature. That tells us that demand is exhausted, and that also tells us that a smaller amount of the supply could move the price down. But is it really a small amount here? This is a significant supply spike. So to me, it all looks still very much bearish at that point. Another question from Murat. Do you want to see in phase B the volatility to decrease to give us a hint of the accumulation? If volatility does increase in phase B, can it somehow still turn into the accumulation? Yes and yes to both of the questions. Why? Because, well, we definitely want to analyze phase B and start making, early assumptions. Actually, with our students, we're trying to figure out what is happening in phase A. Could we, come up with the bias definition based on the price action in phase A? And my answer to you guys is usually, don't extrapolate, the analysis in one phase and apply it to the whole structure. Think about the ongoing picture. And just because the buy and sell orders are going to come in a specific sequence and the price is going to react to those orders in the sequence as well, we really would like to create the Wyckoff story from left to right. And therefore, start from the beginning of the chart, identify different environments, identify different biases, and then as you go into phase B, this is where you're going to be observing, whatever price and volume action is happening here. Could we have phase B with high volatility and then it still could be an accumulation? Yes, but then as we go to the right, we need to see that absorption of the supply that has come. So we need to see that the price has no ability to go down significantly, and that supply signature will start to deteriorate, and that's, the absorption would happen. There are quite, sometimes complex structures, especially reaccumulation structures, where we would have, let's say, the texture of the reaccumulation to occur first. Then we would have some kind of distributional pattern. Then we would have some kind of reaccumulational pattern again. So you can imagine the frustration of a lot of traders, as to how this happens. A lot of examples like this could be found, for instance, in Tesla in 2014 to 2017. You could also look at our current market from 2018 to 2020. The same type of principle where you have quite prolonged trading range, and then you have or you can localize different type of textures and different type of biases. So it's a little bit more complex answer, and should be more complex, Murat, to your question, rather than, or is it just binary, absorption with lower volatility or not? So a lot of things could happen in the trading range. All right, I think that we're gonna stop here with this particular bias game. For those of you who still want to go through this, definitely, as a homework, go through this game, read the Wyckoff story, and make sure that, you're following all of the logic here. Here's our next bias game number 60. What do you guys think? I'll give you maybe like 10-15 seconds to think about it. What do you think this is? Is this an accumulation or a distribution? And I think that this one, probably gonna be somewhat tricky. So we will have to see that there are more subtle nuances here. So you'll have to really, really think about this. And I usually ask you guys, during the class, what do you think? But, I am not gonna tell you exactly, where we are as a group, just not to produce any type of bias. What I really would like you, the students who signed up for this class, to do is to, as a homework, print out this chart, start going through swing by swing analysis, bar by bar, price structural analysis, price volume analysis, and then, create your own Wyckoff story from left to right. And let's just see where we're gonna be. All right, sounds great, thank you. So this is our homework assignment. I mentioned Wyckoff market discussion tomorrow. Everything about the current market, what Bruce and I do in this class, and this is usually a very quick, intense class, hour and a half. Tomorrow we're going to have a free webinar, so you're all welcome to attend. Sign up on our website. We go through the markets. We go through any type of case studies that we might have to look at what's happening in the market in terms of the catalysts. And then stock selection that's going to start with the sectors and industry groups. And then any type of contribution by students, specifically tomorrow, we are not going to have students' charts. We're just going to devote our studies, to the markets specifically, and we'll try to go through as many stocks as possible. So a very fun session every week. So if you're interested to see what this is, come tomorrow at 3 p.m. Pacific, and we'll be happy to see you there. All right, we are at around 4:30, so we have around an hour. So this is great. Let's jump into our exercise number 1, action sequence exercise. And this is where those who are students in this class, I want you to start volunteering. So say yes if you want to volunteer. Meanwhile, we're going to give you the first chart in this sequence. And the goal here is just to analyze the chart and to make sure that you go through all of the parts of the analysis, whether this is a structural analysis, trend analysis, price and volume analysis, whatever tape reading techniques you would like to apply here as well. All right, well, we have a volunteer, so let's go to John. Okay, so 2 volunteers. We'll try to come back to both of you. Maybe someone else would like to volunteer. Hi, John, you have to unmute yourself.
Can you hear me okay, Roman?
Yes. How are you doing today?
Doing okay. Thanks a bunch.
Absolutely. Okay. So how would you start this analysis?
So let me just kind of ask, like, what's the goal here? Are we doing like accumulation distribution, or is it something a little bit different?
It's kind of
that
a
you're looking for?
combination of the bias game. So definitely we want to understand what the current bias is. We also want to identify, are there any trades at this point that we could conduct? And if there are, some kind of trades, what kind of, campaign trades would we have? For instance, multiple points of entry, either to the upside, to the downside, any type of scales in, scales out, exits, and so on and so forth.
Okay, so we haven't actually entered the trade. We're looking to see if we want to.
Yes.
Okay. Cool. Yeah, I would say I guess start by kind of looking back towards the past there a little bit. Maybe let's see. It looks like we're I don't know what year it is. Maybe the second year.
There is no reference to the years, so this is very intentional. As you could see, we have multiple years here, so about 3.5 years. So therefore, you could conclude that this is a weekly chart. This is not a daily chart.
Yeah, so I was thinking maybe in that second yearly range is what I meant there. The first thing I noticed is that we're kind of bumping up into a little resistance at that $17 price, $17 to $18 price range, which goes back into that second year where it was a nice, handily, just sliced through that level with that big red bar there in July. Yeah.
Good.
So that's kind of telling me we might have a little overhead resistance right here. Little overhead supply that we need to work out. Perfect trend lines drawn there. I think that if you look a little bit closer to the present day, you've got you've got what I would call a bit of a sign of strength on December, just in the most recent December.
Okay.
Yeah, so we've got potential break through the bottom channel there that you just drawn, but you've also got a slight sign of strength there that held at that $14 price range in February. So I would say, 14, yeah, right around in that area. So you've got the gap up. It came down and it held that. So if I were taking a long position here, I would look to see how it holds that. And if we get kind of a retest and then pop back up for another maybe a potential swing trade, exactly right where you were going there, or if that swing trade fizzles out and then finds resistance kind of in that $15 price range for that bottom channel trend line there, it could be further weakness down and filling that gap, maybe coming down to test the $12 range again. But one of my favorite plays is just to buy a pullback on a gap up. So I would be looking to take a position somewhere around 14, risking 50 cents if I had constructive pullback to that for a long position there.
All right. So I'm hearing a lot of tactical thoughts, which are great, by the way. I like all of those. And I probably would be thinking the same way. I mean, like if I'm not going too deep into the analysis, and I'm just thinking, okay, well, what's the bullish case scenario? Well, it has to prove to me that it can go up, right? Like it did before. For instance, like in this area, there is some kind of supply emergence, then a high-low test, and then the recovery. So the trade that John is discussing is this type of trade. So here is our point of entry. The same happens around this area right here, a high-low retest, and then off we go. Here is another potential point of entry. Whether we are swing trading or whether this is a campaign trade, we could use those 2 points, as our add-ons or initial points of entry. So could the same happen here? So tactically, I absolutely agree with John that, for the bullish case scenario, this is exactly what we want to see. And I would say that for the bearish scenario, right, we are in a very much established uptrend here. If we break to the downside, go up, and then break again, this is going to be some kind of reaction and the next attempt for the downtrend. So this is all tactics, and this is obviously very interesting. I want to come back to a very interesting thought that you said about this bar. To me, this is the most important bar so far on this chart.
Yeah.
So what are we expecting in the bullish scenario the price to do here? And even with what we see right now, does this bullish intention being fulfilled?
What we see right now, I don't really see the bullish intention being fulfilled.
And how do we see that? What tells you that maybe this rally is over? I mean, like we've discussed the bullish scenario, let's discuss the bearish scenario here. Are there any bearish signs?
Yeah, I think what we see there is if you look at like November, December, you see some volume spikes, especially like December, that gap up. And then volume kind of begins to wane a little bit. And even into like February, March, and April, it begins to wane. And then you get price going down, volume going up into the April and May months with increased effort there and result to the downside. So it's might be telling me that that supply is, or the demand is waning on the way up there. As volume goes down, price tries to go up, but it gets rejected pretty easily at that $17 price range. And then volume comes in and price easily begins to move to the downside. That's
okay.
What I would
rephrase this a little bit. So we are looking at first of all, we're in the established uptrend. And think about this uptrend as being established also on the
if I may, Roman, I would also just mention that just by looking now, it looks like up thrusts are kind of waning a little bit.
Okay, so shortening of the thrust, is that?
Yeah,
Yeah.
yeah, I just
Okay.
kind of noticed that.
Great. Okay, yes. So let me rephrase all of this. We're in an established uptrend. It actually lasts for some time, a year and a half about. Our goal is to overcome this significant bar to the downside. This is where the majority of the supply and institutional capitulation has come. So the bullish scenario would suggest that we would overcome this level, we would commit above, and then we would have some kind of successful retest. And what do we see? We see the conditions, the bullish conditions, deteriorating, right? So, as John has said, look at the shortening of the thrust. Here is our model for the upthrust, and we're seeing how there is not a lot of progress on the last attempt to go up. Not only that, I think this is a really good observation by John that, we're having the increase in the volume signature, and yet the result is shortening of the upthrust rather than more of the increase of the upward progression. And it comes into the area of the high of that very significant bar to the downside. Okay, well, uh, that suggests some kind of vulnerability. But it doesn't really mean that we're going to have the reaction right away. There should be some kind of distributional pattern that's going to be available or further deterioration of the demand. All right, well, how about this rally compared to the previous rallies that we've seen? Right, so here is where the rallies are shortening in the upthrust, and now we just don't have anything. So demand has decreased so significantly that suggests that even without an increase of the supply, the price could potentially have some kind of reaction. But what if supply comes? And what if supply increases? And I think John has mentioned, this volume spike right here. This is an attempt to rally out of the middle of this short-term trading range. And yet, instead of rallying, we are reversing here. So that suggests that supply has increased. And now after that, right away, we have 2 weeks with the relatively high supply signature from what we've seen before in this area right here, and the price follows. So demand deteriorated, supply has come, and the price started moving down. We have all of the 3 elements that are suggesting that the reaction is imminent. So John, would you play that reaction? And if you would, what would be your target?
Are you talking about the bearish reaction?
Mm-hmm.
Yeah, absolutely. I would look for the confirmation, maybe like a retest of that 13 to 14 trading range that you mentioned there. I would look to enter short on that failure there, and then as far as a retest goes, I would probably do at least some kind of a retracement into I'm trying to think and just kind of looking left in the prior support somewhere in that. I mean, you've kind of got it right there, maybe like between 9 and 10 or something like that. I would think would be a decent retracement, like a value line somewhere in there, even if you go further left.
Okay. And when you look at this, and I just want to clarify here, because we are going to look at the horizontal volume signatures, how we look at that. But at this level, guys, you should be able to define where the main levels of the support and resistance are based on the supply and demand signatures. So where do you see the last time where, let's say on the way down, if we're going to have the reaction, where did demand come in a very, very significant way?
Yeah, well, you've got that $11 line drawn there, that what used to be resistance became support in November on decent volume.
Is there a specific Okay, in November here. Okay.
Yeah, right in there.
Okay. What else? If we're gonna fall below 11, then where?
Then I'm looking at that $9 range.
It's a specific bar that you would point to and just say that, yeah, demand was so present in there.
I would probably.
Judge the market by its own action. Everything is on the chart, so we just have to observe correctly. What about this bar right here?
Yeah, I was looking at that. It definitely looks like a lot of supply coming in, but you found support at $8.
So that supply is not just supply, there is some
Exactly.
demand, right? So
Yeah.
here's our next range. If we're gonna break 11, this is probably where we're gonna be, somewhere between 11 and 8. And we don't have to be extremely, precise. This is just the next level. After that, we're definitely going to be looking at some, climactic action. So here is our next level. And so 11 and 8 are going to probably going to be crucial, probably going to be provide some kind of, level of the support. And we will have to see how the price goes down. So why don't we trade this? And let's just see if we are right. So the first point of entry could be just on the break of the 14. I mean, we don't mind the break to the downside type of trade. Definitely some kind of reaction up and then the next move down. So if we're going to have this type of structure, this could be another trade. So just breaking down. I wonder what you think about the duration of this trade, duration of this reaction. Is it going to be a continuation of the downtrend that we've had, or is it going to be more of the bullish or bearish reaction? What do you think?
I'm sorry, could you rephrase that for me, or just say that again?
The reaction that we're expecting within in the context of the structure that we've seen, because this is definitely has been
Okay. Yeah,
an
yeah.
accumulation
Gotcha.
structure. Are we expecting more of kind of like a bear market type of the reaction, or are we expecting just a reaction within the bullish context of the uptrend?
I think it's possible that it could be a continuation of the uptrend. I think it'll just depend on what happens in the new trading range. We are putting in. I mean, if you're considering like the broader context of the past 3 years that we're looking at here, it's putting in. I mean, it's a lower high from the early highs in around $37. But my thoughts would be the amount of volume that you see in year 2 and year 3 on the screen there, like you just pointed to. I mean, it almost looks like the volume that came in March during the COVID break. So I'm thinking like there was a lot of accumulation going on there. So yeah, maybe just retesting the supply levels around that $8 to $10 range,
Yeah,
and then
so
bringing it back up.
Yeah, bear this in mind. I mean, this is a really good thought by John, and this is a really good observation right here. Look at the volume signature, how it increased into the low, stayed relatively high, and then went down as we, going above 11. So I wonder, what this volume signature is about. So we'll talk about this a little bit later on. Let's see what kind of trade we're going to have here. Okay, so here is our trade. So we would come into this trade on the breakout. The first bar is to the downside. Then look at the second bar. There is a rally right here. So here's our sign of weakness. Here's our LPSY. So we would actually get into both positions. So we would scale in like that, 1 and 2. And we would be in this trade. Is there any exit points that you would be thinking about on the way down? And then let's just assume that, we are scaling out one position and then we are closing the second position. What would be those points for you? And would you keep, any of them? Would you keep the whole size? Would you keep the second position?
Yeah, not knowing from like a point and figure standpoint, but just based on like what we talked about earlier with that $11 to $8 range, somewhere in the middle there, like a 10 To me, as long as price is being constructive to the downside, the channel seems to be healthy going down. I would probably manage it based on the actual channel, or even like tighter. Yeah, there you go. I would kind of manage it on that. Maybe go down to like a daily time frame or something like that, just to make sure that it's not popping up too much. I would lower my stop. If our entry was at 14 on the break there of that gap, and then we added, say we're averaged in around like 13.5 or something, or 13, then yeah, move your stop down to 12 as it breaks through 12. A little bit of porosity there on that one little bar that bounced up in between May and June. Yeah, and then as long as it stays healthy down, just kind of move your stop down along those little consolidations along the way.
Where is your exit?
I would say on the break of whatever the that next stop would be. So right there would be, if it goes climactic on us all the way down. If our target was 8, and we knew that from the
John,
May of the 3rd,
all of the data are there. So where is your exit?
I would get out as if it touches 8. Honestly, if I rode it all the way down to 8. So.
Okay, so would you get out completely or just partially?
For me, my style of trading, yeah, I would get out.
Okay. All right, great. I think this would
yeah.
be a great trade, right? So we are entering here, we're entering right there, we're exiting here, and we're exiting the whole position, so we're not scaling out. Alternatively, you could definitely exit at 8, and then you could still have the stop loss somewhere here. This was the last commitment to the upside. You could also start thinking that in this area right here, there's something different that is happening. So let's just go through that a little bit, and let's talk about the character also of the reaction. Because as we observe the character of the reaction, we start contemplating our exit strategy. So, John, how would you describe the reaction in terms of the character? Is it a bullish reaction or is it a bearish reaction?
It's bearish. Are you talking about the once we hit 8 or the entire reaction there?
The entire reaction, yeah.
Okay. Well, volume is heavy to begin with.
And by the way, hold on a second, John. Let me just explain to our listeners what do I mean by a bullish reaction or a bearish reaction. So obviously, reactions in the uptrend are going to be present. Here is a reaction. Here is a reaction. But those are bullish reaction in the sense that those are temporary stopping actions or temporary reactionary points, and then the price resumes its move to the downside. In the downtrend, we're going to have bearish reactions. So this is where the reactions are significant. They are a part of a much larger downtrend structure. So we could make a judgment whether this is a bullish or a bearish reaction by the character with which the price moves and the volume as well. So what do you think? Bullish reaction or bearish reaction?
I think it's a bearish reaction.
Okay, so we're expecting a downtrend to continue. If we're expecting a downtrend to continue, John, just curious, why are we closing the position?
Well, I don't like to hold positions for very long, but yeah, I mean, if you want to hold it for more than 4 or 5 months, then hold that half and then look to
imagine
re-enter.
that this is a 1-minute chart. So would you hold more?
Yeah, I mean, if it's on a short time frame like that, and I do a lot of day trading, so yeah, I mean, I would probably hold the half from up in the 14 range.
I'm gonna just totally negate all of the data here. Just think that this is just 5-minute chart.
Yeah. Yeah, so if we're looking at the bounce there off of 8, the volume's waning on the way up there. So, that would probably tell me at that point that, the rally looks kind of weak. That one big positive bar in between September and October, I'd be looking to see what happens next. And obviously there was some selling into that as well. So everybody's thinking, hey, this thing is going back up, and strong hands are selling into that, and I think the price reflects that on the next couple of bars. So you'd be looking for kind of a break between that $10 range back further down to the downside. So maybe just a little bear flag right there.
Let me ask our class here. What do you guys think? Bullish or bearish reaction? And if you're thinking that this is bullish, the opposite of what John is thinking, why do you think this is a bullish reaction? I mean, like, what would tell you that this is a bullish reaction rather than a bearish? Okay, Mike is saying absorption. Mike, where do you see absorption there? Amit is saying change of behavior. So what exactly in that change of behavior do we see? Franz is saying bullish. The continuation of an EVO's bar isn't really there. No commitment from Iqbal. Yeah, this is a very interesting comment, Iqbal. So what are we committing, to? Bullish, small candles from Craig. Yeah, absolutely. We'll just discuss this in a moment. Kurt is saying volume in this swing is much higher than the price swing and is moving further. So we could discuss that as well. Yeah, so effort versus result. Laborious to downside compared to previous downtrend. Change in characteristics from last downtrend from Sam. Really great comment, Sam. Thank you. Low is the latest significant bar has not been broken from mono. So a good thing. Okay, volume decrease. High volume, a little bit result. Okay, and what else? Reaction is 3 times prior reactions, covered a lot of ground to the downside in one move from Michael. Okay, but obviously, Michael, we need to discuss, what kind of result does it have in terms of not just the extension, but where did it stop? Okay, all right. So from here, let's just kind of, discuss this a little bit more. So obviously, the break itself, we would see the capitulation of some of the institutional hands here. Why? Well, because they're looking at the uptrend, and if they're, based their trading on technical models, they're probably gonna say, well, we are breaking to the downside, so I'm gonna at least scale out, trim this position a little bit, or close the position. So all of the trend followers are gonna say the trend is broken. All of the momentum players are gonna say the momentum is to the downside now rather than to the upside. And then more importantly also, if we would just look into this area right here, and we know that this is a weekly chart, so about what, maybe like 8 months or so, 9 months, we are not seeing absolute or relative outperformance for this particular stock. So institutions are going to start dumping it little by little, trimming and scaling out of this position. And then they suddenly going to capitulate. What does this capitulation produces? Well, not just the break of the trend, but, and more momentum to the downside. And we were absolutely correct. Here it was John, to establish this position to the downside. Our expectation was that we are going to have a more meaningful reaction than we've seen before. And we know that the target zone, so between 11 and 8, that was our area. So what happens during this target zone? Let's specifically look into this area. So 11 and 8. What is downward spread doing, John? If you would compare, let's say, like we would look at 2 parts of this reaction, what is the downward spread doing relative to what it's done before?
Yeah, it's diminishing a little bit compared to the top.
So there is less selling pressure, right? Could we see that of a lesser pressure in the volume signature? So I would say that probably yes, right? Just going into that, there are some bars that still produces some movement to the downside that we don't see a lot of volume signature like before. And we could expect that, this could be an ease of movement.
Yeah, that's what I was thinking. Ease of movement with lower volume there.
But we're in the target zone. So, and then look at the volume spikes. Let's go bar by bar here. This is going to be important for us. Here is first attempt to rally above this high. and it fails. So there is still some selling is present, but not as much as we've seen before. There is a continuation of selling, and we've seen some kind of, climactic volume signature that probably tells us that maybe we are done, but we need to confirm that. So on the next bar down, we have an attempt to overcome this low, overcome this support, and really quickly the price closes up. So this is bullish price-wise, and also diminishing supply suggests that we're probably in the vicinity of the low. The next downward bar is even on the lower supply signature. So we are expecting from here some kind of rally, and we're thinking that we are experiencing some kind of reversal. Now from here, let's combine all of those analytical points. We have diminished bearish characteristics, so it's less bearish the way how the price goes down. It creates a higher low. It also has a reversal and starts showing diminished supply characteristics, and we're expecting some kind of rally. So now with this rally, with the expectation that the rally is going to happen, obviously our position preferably would be closed in this area right here. I like John's, $8 exit. I probably, doing this less than him. I'm always trying to find some kind of points of the confirmation. So I would be looking into this area to see if my exit would be somewhere here. And I probably exit in everything at this point because, again, of those somewhat bullish characteristics as the price goes down. So it looks bearish, but it acts bullish on the spread, on the volume signature, and on the reversal itself. Okay, well, let's discuss the last 4 bars that we see. We're seeing on this bar that there is a diminished supply characteristic, so absorption has happened in this area right here, and we understand now that there is some demand behind it. And then this big bar definitely, as John said, has some increase of the supply signature, and it goes into the last 2 bars after 11, that we need to overcome. So supply comes, and then John, on the next 4 bars, what happens? On the bar number 2, after the supply occurs, what do we see?
Well, we see a reversal, but it's on, I would say, diminished spread.
Okay.
And it's still, I would say, above average volume.
So spread to the downside diminishes, and then supply slightly diminishes. But we are not really reversing this bar, right? So we are not reversing the low of bar number 1. What about bar number 2? I'm sorry, bar number 3.
Bar number 3 still holds the main positive bar, or bar number 1.
So spread is diminishing even more, right, relative to bar
Yes.
number 2. And then we
Holds
also have some demand tail. And so behind this volume signature is not just a decrease in supply, there is some kind of increase in demand. And then right after that, as it touches the low, bar number 4, even though we don't have a lot of demand signature right here, but supply is not coming.
Correct. It's a little kind of an inside bar. But I would be curious though if we've kind of got our target from 8 to 11, if we're not viewing this as kind of an automatic like a selling climax with the automatic rally, and then expecting kind of that 11 to be the top of a new range and to come back down and retest that.
I think it's a very interesting thought, John, that, this could be a climactic action, automatic rally, and then we are in the range. Why is that? Well, because, it looks like, the areas where the trading range would start unfolding. Now, specifically here, what do we see at the conclusion of the downtrend? We see a lot of volatility, right, where the spread is increasing, there are some gaps, there is an increase in the supply signature. We don't necessarily see that type of price action where we see a general capitulation. I wouldn't say that there is a lot of volatility, right, where the spread is increasing, there are some gaps, there is an increase in the supply signature. We don't necessarily see that type of price action where we see a general capitulation. I wouldn't say that there is a lot of selling climactic type of characteristics. They're more localized to a specific bar. So there is no general capitulation. There are probably just weak hands, selling their positions at this point as they can't carry them, let's say below 11 or 10. So the trading range here might be a little bit short-lived just because those supply characteristics are not the same as we've seen before. Okay, I think this is where the tactics are going to be very crucial. I think if we are basically saying if this is a bullish case scenario, then we want to have a confirmation as the price goes through this 11.5 level. And then probably somewhere here we could open that position. Our expectation would be that not only would we probably hit this target, but probably would finally overcome this high. So meaning that we might potentially go above 17 and 18. If our stop loss is around 9.5, which seems to be a logical place here to be, if we're breaking to the upside, that's only $2 and of risk. And if our target, let's say maybe the next high here, and we just plan a swing, maybe 22, 23, then from 11.5 to 22.5, we're seeing what, another $11. So our reward to risk ratio is very favorable, 11 to 2. So this is a potential trade that we could do.
Would it be possible to risk off of the bottom of a diagonal trend line there if you were thinking about a long?
Where is that diagonal trend line? Right here?
On no, the new reaction there.
Mm-hmm.
So yeah, draw from that there. I was thinking if it holds that bottom trend line there,
Mm-hmm.
perhaps take a position. Once it holds at 9.5, the low of that positive bar number one you had earlier, and then it mines the bottom channel. Try to risk off of 9.5 with an early entry there.
You can, yeah, absolutely. I think that we just have a little bit different styles in terms of the entries, John, right? So I'm seeking more of the confirmation. So confirmation would come, with the break after the absorption of whatever supply has come here. So that would show kind of the strength of the price to go up. But I totally see your point. I see the logic here that if we are bullish, we could definitely even, have an earlier entry at 10.5. This could be a pro position, and we still could have the stop loss below 9.5. So this would be much more favorable, and we would have the reward to risk even more favorable. So something like 11 to 1. So this is a really good ratio right there. Yeah. So just difference in styles. Okay. Well, the bearish scenario obviously would be just a collapse. So something like this, where we either go into the trading range and then we're collapsing below 8. Our lower targets would be around 6. But this is what I like about trading tactics. If this happens, then we are in the position. If this doesn't happen, we are not in the position. And we're just going to say that we are wrong. And that's it. Murat is asking, what's the structural analysis here? Well, at this point, let's just go with the trade. John, here is that trade. So we probably would be even getting into this position a little bit earlier just based on how the price starts to unfold. This next bar is very bullish with the increase in the demand signature from the previous bar, and it overcomes the lost commitment to the downside. So that's bullish. Next bar does not have a lot of supply, so also a very bullish sign. Next bar, again, a bullish sign as we approach the resistance and we hold there. And then the breakout bar itself has the increased demand signature, so that's also very valid. You could literally start accumulating your position in this area with anticipation again of the targets that we had, about 22, 23. Definitely we want to see that this to overcome this area. The break above 17 comes naturally on the increased volume signature. So that suggests what, John? in the context of the overall picture right here, that they are buying so aggressively on the breakout? What do you think?
Oh, well, it definitely looks like we've broken the resistance from that big red bar over to the left that we talked about earlier. So yeah, I would be looking for that to become support, and then some kind of like supportive backing up action there that I think we see in that 16 to 18 range.
Mm-hmm. But in terms of the overall picture, I mean, like, we had so much supply.
Oh, it's bullish.
Yeah. So
yeah, definitely
the way how it overcame these two bars, this volume signature basically consumes whatever supply was available here, and this inability to overcome this supply earlier on the chart, in the middle of the chart, now we are going there, and we're doing this with conviction. So a long-term picture is becoming more and more bullish, and now we kind of starting to understand what is going on here. A bullish reaction within a much larger structure, some kind of rally that shows a lot of absorption of the supply and demand comes in aggressively, creates the new higher high. So that acts a little bit more as a sign of strength. I like the idea that John has about the backing up action. So we just need to understand the what's the extent, of the possible backing up action that we could have. Okay, so let's come back to our trade. So let's just say that we've entered somewhere here. John, where would be your exit?
Yeah, so I guess I'm always looking left for potential exits. That the next level of resistance was like 24 range. Well, if we had entered there, the first level would be again that 16 to 18 where we were before.
Are you still out here?
Sometimes I'll take like a quarter off. I think it just depends. I take it, kind of a bar by bar scenario. So if it's bullish day and we break through handily, then I'll hold on to it just to see, and then I'll move my stop up. So yeah, I would on a bar like that, I would probably hang on to it.
Yeah, there's no reason to close the position here, even though we're hitting the resistance level, and we were overcoming this big supply bar, and we're kind of almost there. We actually made a really good progress on the weekly basis. So momentum has increased. Whenever momentum increases, we need to figure out if this momentum would carry us a little bit higher. What's the next resistance points? Right here at around 23, 24. So we would let this position run until we probably go into this zone, and we're going to see some kind of deterioration of the demand signature and price. And do we see that? Well, the next bar is slightly less. The next up bar is even smaller. And then the bar after that to the upside is actually having both a failure to create a higher high and also some kind of supply spike on that. So around this area, this would be a very logical place for us as a swing trader to get out of the position. But John, what if we are, and again, maybe for you, imagine that this is like, I don't know, an hourly bar, or maybe this is a 5-minute bar, whatever, is appropriate for your time frame. And let's say that you see this as a bullish pattern, and you want to campaign. So let's just say that we've exited partially at this point, and we're still holding the position from this area. How would we deal with the backing up action that you referred to? Are we expecting more of the reaction here? Are we expecting more of the trading range here? Or are we expecting the price to go up from here right away?
In the backing up action? Yeah, I mean, I would obviously look to those two big volume bars. I mean, you could basically draw like one big bar from price 14 all the way to 22. And just know that that's kind of like providing support now for the stock or whatever it is. So I would obviously, yeah. I mean, if you're campaigning it, I might sell half into strength there, that sign of strength, and then hold on to half and look for a pullback into prior resistance, which was that 16, 17 area. See how it handles there. Look for a proper consolidation, and then add along the lows as long as it's constructive.
Any specific action points at on the last bar? Do you want to add to the position?
On the last bar, yeah, so I would be looking, I'm seeing the little tails there at 16, just kind of hanging off of 16 there, like feet off the end of the dock. I would be looking for something as that small trading range matures to take a position right at 16, as long as it comes back up. So like on that day there, that third test of 16 right there, yeah. I would probably be looking to re-enter the position somewhere right around there.
All right, so should we kind of like write it down here for you? So there was an add-on at this area? Okay, so what do you think? I mean, like if we're thinking about the backing up reaction, what would be the lowest possible point here where we can go?
Well, we're back down to that 14, which was, kind of the break of that prior range where we took the short. It's also the bottom of that.
All right. Also,
bullish bar.
I'm thinking, John, that maybe like again, this area could play out a little bit. I mean, as a more pronounced, maybe like one-to-one type of move. So that's a possibility as well. So with that in mind, let's just say that we have our first prop position, and then we have the second add-on position. Where would you place the stop loss with all of the thoughts here as to how the reaction might unfold?
Even if I'm looking for that move back down, or if I'm okay with a move back down to 12?
Well,
11?
it's up to you. I mean, like, I don't know. What would you do?
Yeah, I mean, me personally, I would, if it breaks the 16 level, I'm probably going to be out because I don't want to ride it all the way down back to where I was in, where my entry is.
Okay, so I understand. So our stop loss is somewhere like around 15 and a half or 15
Yeah, if it's not holding the new
for both.
that new area of support, then I'm probably, I'm out.
Okay. All right, so let's quickly look at this reaction. What could we expect? The causality here is not that big, right? So we're not expecting a very deep reaction. But what really is bothersome is that there is some supply that is still there, and this supply is relatively high to what we've seen before. The good thing is that it doesn't really produce like big gaps to the downside, a lot of big movements to the downside. It is still within the confined within those two big bars. Now, the next bad thing that we could see from the chart is that attempts to rally are not that great. We're not overcoming this loss commitment to the downside. So this looks a little bit short-term bearish, and then on the background of the diminishing demand signature. So it almost looks like as if they came into the position, they established a quite significant size in this position, and then after that, there is no buying. So we might have some kind of continuation to the downside. I would probably be thinking again, this level plays many times here. Look at all of this, attempts to stop. So probably into this area around 12 to 11, maybe a one-to-one relationship here. Targets so 24, 16. So that's 8, and then from the high, let's just put it from the high, so 19 to around 11. So yeah, that makes sense. Okay, well, let's see. We know the tactics. We have the two positions. Let's just see what's going to happen next. All right, so off we go to the 11 area. So this is where both of the positions will be closed, John. And now looking at the latest data, first of all, looking again at this reaction and thinking about how we analyzed this reaction prior to that, what could you say the character of this reaction is? Is it a more bearish reaction or more bullish reaction? Is the context still to the downside or to the upside? Okay, let me see.
Am I sorry? I think I was still muted.
Yeah, go ahead.
Yeah. So I think it's probably a bit more bearish, just because the candle spread towards the bottom of that range there tends to it's picking up a little bit more.
You mean probably this concluding bars right here?
Yeah, volume kind of spikes, but then again, it's increased effort with diminished result towards the end of that. So
yeah, results to the downside definitely diminishes, right? So we're having a high, low.
Yeah, so there's obviously a little bit of an effort to push the stock back up, but then it kind
then
of
this volume
falters.
signature is not necessarily just supply. There's demand just because we have stopped moving down.
Correct.
We have some volatility here. So multiple attempts to go up. So demand is present in this area. So I think that, this bar right here still has such a gravity to the whole structure. And look how the price after that kind of stays at this level and does not go down. So that's a very interesting development as well. So some demand is coming in. I would say probably, John, on the contrary, we're probably thinking a little bit more bullish here with this reaction just because of where it stopped, how demand came in, and how previously on the way to the downside, we don't see a lot of selling. So the selling has happened into the break. The selling has happened at the top and a little bit on the initial reaction to the downside. But then the rest, it's almost like the price just basically tanks on its own. Why? Well, look at this demand signature. So demand was not as present. So the price just drops on its own weight, under its own weight. And then at the end, where we should be expecting some kind of stop in climactic action, that's exactly what we see. Okay, well, then the next point for us is going to be, well, what about those reactions? What do you see, John? We are in the trading, so we need to figure out the bias here. We are not in the position anymore.
Spread is increasing on the reactions.
Okay. So hold on a second. Let's just be very clear. So here I see the downward spread increase relative to, let's say, this area right here. Then what do we see here? Diminishing down spread or increasing down spread?
Diminishing.
Okay, stop. Don't say anything else. But what about here?
Diminishing spread as well.
So the downward spread is diminishing throughout all of the three reactions here. What does it mean, bullish or bearish?
Well, it's volatility is contracting, so
and
I would say it's more of a bullish.
Is doing what?
Is decreasing, so it's kind
decreasing as well. So volatility is going down, supply is going down, and we are not breaking the support that was established by this big bar right here. Bullish or bearish?
Definitely bearish. Yeah.
Definitely.
Oh, excuse me. Sorry, I meant bullish. Yeah.
The bullish. Okay. Yeah, I was like, surprised.
Yeah, and your down thrust. If you're looking at your down thrust, we've obviously put in a lower or a higher low at that $11 range than we did at that $8 range, than we did at that $5 range. So your down thrusts, as it were, are weakening. And volatility is contracting, and I would be looking at where we are now at that $12.90 level as kind of a potentially the last point of would that be supply if we're bullish? Support. Or last point of support if we're bullish, yeah.
Okay, yeah, there are quite a lot of bullish signs here, even within the trading range itself. Look into phase B. Where does the price reside? If we're thinking that this is phase C, and John, this is what I'm assuming you are thinking here, if we're thinking bullish scenario, so phase C, phase A, a selling climax, automatic rally, secondary test, everything is tested here. There is that volatility that is very common for phase A Then into phase C, volatility goes down, supply goes down. So everything looks bullish. And look into the phase B, price action. It spends all of its time in the upper part of the trading range. So what does it tell us in terms of the market participants' behavior? Do they want to sell, or are they holding on to the position?
Yeah, they want it to go up.
Yeah, we don't see a lot of selling. It's only in this upthrust action where some supply is coming, and then what does it produce? It produces that bullish character type of the reaction into the low, not undercutting 11 and not having any closes. So this is a short-term bias, and we're thinking that the short-term bias is bullish. What about the long-term bias? Like if we would look at this whole formation right now, how would we even like contemplate about it? How would we label it? We said that this was a sign of strength. Would we still think that this is a sign of strength?
I think so. Yeah, I think. Are you talking about just kind of like a long-term diagonal trading range that you had drawn earlier?
Yeah, I mean,
So
we
yeah,
could probably draw it in multiple ways. But this rally right here, it does have those sign of strength characteristics. So
yeah, maybe just an up thrust there that was a failed up thrust attempt
this right here,
in
failed
the
up.
overall in the overall structure from left to right.
Okay, so how would you draw the trading range?
I would probably draw it diagonally. I don't know how to tell you to do that, but yeah, there you go.
Okay. So
Okay, yeah,
please note
perfect.
that there is a high low, and then there is another high low. There is a higher high relative to where we start the trend line, and then another higher high. So even as we kind of consolidate in this long-term structure, we're already experiencing that uptrend characteristics. Anything else, and we are having this very significant sign of strength type of rally in the middle. Sometimes this type of sign of strength rally in the middle of the trading range could be a minor sign of strength, and we could expect a major sign of strength, and obviously that would overcome the resistance right here. Okay, well, long-term bullish or bearish?
I would say bullish. I think we're probably kind of approaching that C area where we're
Okay.
in the last
Any
point of
trades that you would
support.
take here?
Yeah, so I would probably I would look for anything. One of my favorites are just springs, or undercuts and rallies. So right
Let's
around
just say that we're
$11.
here at that last bar. Would you take this trade?
Yeah, I would probably take it there, just basing it off of risk of 12, right around $12, just the bottom of that range.
Right. So stop loss at 11 around? Below 11? Or did you say
Yeah.
12 somewhere here?
Yeah, I'm usually pretty tight. So 11, I would I'm okay with 11. I'm not sure I would take it on the bar that you have circled just because it looks a bit bearish short term. But
Okay, so why don't we just say that this was the bar for entry? Let's say at $12 right here. So was the stop loss just slightly below the lows?
yeah, absolutely.
Okay, so this could be our pro position. What do we intend to do here with this trade? Well, first of all, we want to see some kind of confirmations that first, the price can overcome all of these short-term levels of the resistance. That's number one. We want to accumulate a meaningful position because we're thinking that the long-term bias is bullish here. We're thinking that if the long-term bias is going to materialize and we're going to have a major sign of strength, then we're probably going to overcome this diagonal resistance and overcome this 23, 24 level for sure. So in a perfect scenario, we're probably going to have something like this. So if we do have something like this, we want to make sure that we could accumulate in a meaningful way. All right, let's see what happens next. Okay, did it get us out? Maybe not,
No,
just because,
not yet.
the stop loss is not necessarily going to be just below that low. But what do you think about the latest reaction here?
I'm still bullish on the stock
Why?
because it's maintaining the trading range. It's maintaining support at the lows. I would
Okay.
probably
What about the
even if I had
character
been
of the
stopped.
decline? Bullish or bearish? Is volatility going even lower, decreasing more?
Yeah, if anything, I would say it's staying about the same.
Maybe slightly less. I mean, like from the previous reaction to this one. Yeah.
Yeah.
So this looks like a slightly larger reaction. Also, the downward spread in this area is slightly more on average than what we've seen on the last reaction. This looks like the conclusion of this reaction and plays a role of the sprint for the whole trading range. Okay, what about the volume signature? Do we like it?
Volume looks good. You've had some extremely low volume days in there, which I like to see as volume
So
contracts.
no selling, right? So the price goes down under its own weight, or more under the weight of demand that is not actively present. So I would probably be thinking that, this is the time for us to start acting, and probably if we're overcoming this high, this high, this high, this high, and then just overall this high, all of those points could be the points where we could gradually accumulate this position. So, and obviously, if we fail here, that's it. That is the trade. We
Yeah.
we put on the trade if it takes us in, through all of these levels. And if it fails, let's say after like 12 or 13 or 14 and breaks 10, we were on. And that's the trade. Okay, let's see what happens next. Here we are. So we're probably in this position at this bar right here, this bar right here, and then around this area right here again. So 3 entries so far. Okay, John, what do you think about this whole picture now?
Looks great to me. I mean, you've obviously got some bullish days there that you just circled. Looks like we're kind of crossing the river, so to speak. Maybe kind of a minor last point of support that we've just formed a little range there.
Okay, yes. Well, what about this range? So this acts in itself as a minus sign of strength, just because we're overcoming some short-term highs right here. I like the tightness. I like how supply came in and nothing really happened. So supply has been absorbed really quickly. So would we be expecting a continuation here?
Absolutely.
Okay, so maybe another trade. So going through 14 and 15, something like this, another add-on, and see how gradually with each confirmation we are increasing the size of the position. And we're thinking obviously about first the short-term causality that we have, and then the long-term causality that we have that would go into this bar again. Okay, so let's see what happens next. Okay, and we would have another point of entry somewhere here. Please note how the sprint worked out right here. This is a local sprint. Then another local sprint right here. Probably another add-on right here. So 1, 2, 3, 4, and then 5. So this is add-on number 5. Okay, John, we are in the established uptrend at this point. What do you think? Would we be thinking about where are we in the structure?
Yeah, so we've got kind of that backing up action going on up here. you've got that sign of strength bar right around February. Yeah, that one there for the breakout, which is nice. We're also slightly above that 16 range from 3 or 4 years ago. If you if you're looking left, so we're kind of sitting on top of that as well, just expecting multiple levels of support there. Now we're back into the two large bullish bars from back in the past as well. So
what kind of I don't like is the velocity with which the price moves. I mean, like this is a
stair stepping.
Yeah, so there is a lot of kind of stair stepping, but there is no aggression with which the price moves like it did, on the sign of strength there. So why do you think this is? Are they aggressively buying?
It doesn't appear to be.
How would we conclude that?
Based on the volume signature.
Yeah, the volume signature shows us that demand is not that present, but then the price is still making higher highs, higher lows. How's that possible?
It could be that all the volume to the left there had basically absorbed all the supply, but you would expect at least.
Selling? Let me ask you this question.
I mean, judging from the wicks on the price, the bars, that looks like there's some selling going into this backing up action.
But there's no probably aggressive selling like we've had in the downtrends on those big reactions, right? Look at the volume signature that we would have where, they would aggressively sell. So I would say that there is no selling, but at the same time, demand is somewhat not there. And that's why we have a bullish scenario and we have a bullish trend, yet there is no acceleration to the upside just because demand is poor and then there is no selling. And you can imagine that, you're still profitable in this position, but you stay in those very, very long consolidation areas, and then you just have a pop up, so this could be very tiring. But if you are an institution, from an institutional point of view, you're probably still keeping this position on. It's probably slightly undersized, at this point. You need to have more conviction, and you need to see that more institutional money is coming into this stock. We don't see that yet. We saw institutional money coming in right here. This is where they bought a lot. We saw some buying in this area right here as well. But we definitely don't see anything here. By the way, once the institutional money is going to appear on the tape, this will be the timing for us to become more aggressive. This will be also the timing for us to think about more aggressive swing trading, just because the price will start moving much faster, but we need to figure out where that moment is going to be. Okay, so what do we do here, John?
Well, if you've accumulated the position from down low, and I guess depending on your tolerance for patience, then you would just want to wait and see how this backing up action plays out, because it's, if it breaks down here, then it might be a sign to lighten up the load a little bit.
Okay, so where is our stop loss then?
Well, tell me where we're averaged in. 13?
1, 2, 3, 4, 5. So probably around 13 and a half.
Okay. Yeah, so, if we're, I think the trend that you draw there, I like to draw those on my charts. So, if it starts to break down, I would be looking at the volume and whatever the candles, the spread of the candles there. If it's a decisive slice through that 16, I would probably lighten up at least half.
Okay.
And
what would be your catastrophic stop loss where you just say, like, it didn't work out, I'm going to close out the position?
I would do break even probably just to and let it
13
reset. Yeah, set back
Okay,
up
so we
again.
have two stop losses, one at about 16 for half of the position and another one at 13 and a half, $13. Okay, great.
Yeah.
Good enough for me. Here's what happens. We go to 16. What do we do here, John? Okay, let's go to the whole class. What do we do here, guys? What are you gonna do? We are in a position. We are correctly sized. It seems like we had that sign of strength rally. We are thinking that we are in the backing up action. Here is that last reaction. What do you do? Okay, Ellen is saying hold. Francis is saying timing bar, add. Ming and Larry are saying hold. Mike is saying median motion.
Can you redraw that trend line in the bottom there?
Absolutely.
Yeah.
Okay, so let me just go through the answers. Okay, add in more shares from Mike, half off from Steve. Wait with stop loss at 15 from Manu. Orpheus is saying hold. Craig is saying get out. Neil is saying sell. Larry is saying hold. Amir is saying sell. Okay. Kurt is saying hold. John, what are you saying?
If I'm in at 13 and a half, I would on the break of that trend line, I would at least probably take a third or a quarter. I would also keep in mind that the trend line from the prior trading range that we just left. So that line would be right around $15.50. I don't know if you want to draw that line or not, but yeah, right across the top there. That to me would be a sign to, if we break through that, sell more. If not, I'm hanging on to see what that line does for us.
So we're holding on to 2/3. Did I understand you correctly that 1/3 is gone around this area?
Yes.
I see. Okay, great. Yeah, I see some other answers. Thank you, guys. Okay. And we are at 5:35, so we're just gonna see one more chart, and this is where we're gonna stop, and this is gonna become a homework. So here is that last chart. So let's remember this is exercise 1, slide 9. So if I forget, just remind me. And your homework is gonna be, well, first of all, to read two of the articles that I'm going to place in your class page. That's number one. Secondly, to do the bias game number 60. Thirdly, to analyze this particular chart and just think about what is the next action. Are we selling? Are we adding on? Are we holding on to the position? What are we doing? And then also homework number 4, and I apologize that there are quite a few homeworks, but we need to start somewhere. So the last homework is just to think about one instrument that you want to trade as an anatomy of a trade as in the class. So just think about what you want to do there, and we'll figure it out in the next session. John, really great analysis. I like your tactics a lot.
Thanks, Roman.
Are you taking this class?
Yeah, I've paid for it already, so I'm
great.
looking forward to it.
Yeah, absolutely. Me too. So yeah, we had such a great start. And you kind of guys could see again, for those of you who are guests and you're just watching the sessions. This is the work that we're gonna do in this class. So we're building on the concepts that we've got from part number 1 of the Wyckoff Trading course. And at this point, we are going a little bit faster. So just because we're at slightly higher level than we were, at the previous semester, and this is going to be our work. So we will discuss some conceptual things as well. So I will bring, some new material to you guys as well. We'll talk about, reversals. We'll talk about different ways of how we tactically operate, and it's going to come. So I'll have additional slides. But this is going to be the framework of our work, drills and exercises. And again, if you feel that you want to sign up for this course, make sure you go to our website, find that page. If you have any questions, wyckofassociates@gmail.com. Nancy could answer those, or I could answer those. And I'm looking forward to working with you. This is probably one of the classes that, I'm like always so anxiously anticipating, because I'm practicing together with you as well. I don't know exactly, what's going to happen on this bar or that bar. So to me, it's always a practice as well. John, a lot of people are saying thank you, and what a great start, for the whole class. Thank you so much. Question from Amit: can I take practicum without part one? As I have explained, actually no. I'm very strict about that, just because many people have tried and all of them have failed, so I just don't do this anymore. Do you have to email you anything as part of the homework from Kurt? Yes, absolutely. So bias game should be emailed to me. Any type of, let's say this last slide number 9. So I'm gonna put it as a homework as well. It's gonna be in the file, so don't worry. You will download that homework file and you will see everything there. And then also, so bias game, exercise. If we're gonna have anatomy of the trade, each week we're gonna discuss that as well. So those, Kurt, are the things that I would be expecting you guys to email me. Well, with that, thank you so much, and I will see you next Tuesday. Thank you, guys, and bye-bye.